Radio. A second. Okay, cool. So, welcome everybody to another week in the markets with Israel Keys Markets. Looking forward to a great trading week this week. I think we're going to get some interesting market movement, which is good. We are obviously back on our schedule. We took yesterday off, but we're back with the full schedule. And to remind everybody, this is the schedule. So we're going to be back tonight at 9:15, and then we're going to be tomorrow 9:15 in the evening. And then on Thursday, we have two sessions, 11 in the morning, 9:15 in the evening. And then we end the week on a Friday. So you are getting your money's worth. Uh, and while I'm not in a church, let me borrow a church expression. Can I get an amen on that? So we are seeing to it that you literally get your money's worth. By the way, for those of you who have registered, let me just show you this real quick. Uh, if you have not been, if you're not on Telegram, or if your Telegram isn't set to receive notifications, then you're missing out on a lot. So, for instance, the VIP Mentorship Group, this channel, the Sensei channel, is everything that comes from there is coming from me directly. Nope, that's not what we're looking for. Yeah, this is what we're looking for. Everything that comes from there is coming from me directly, but specifically, I want to draw your attention to this particular channel here. So the Market Breakers course, especially for the beginners module. If you have not subscribed to this channel, I sent out the subscription link to the group and through my personal channel. Make sure you subscribe to it, because it is what is dropping there is the course content for the Market Breakers course. The difference between the Market Breakers course and the rest of the program is that the rest of the program is subjective. The VIP mentorship sessions are subjective. They're dealing with what's happening live in the market and how you can apply what you're learning. But the step-by-step breakdown is in the Market Breakers course. And that's the bit that will take 12 months to cover in full. So make sure that you are subscribed to this channel. There's no point paying for something that you don't get. For those of you who are watching who aren't registered, well, £70 a month. Convert that to whatever your rate is in your currency, and you get all of this. You get all of this weekly in terms of your sessions that you can be in live or watch recorded, and this is what you get as well. So you get the Market Breakers course, you get the VIP mentorship, and you get the Mastermind Inner Circle. The Mastermind Inner Circle is starting next month, so watch out for that. And if you get in right now, if you're one of the next 50 people to sign up, you will get that for free with that one subscription. Right. I don't know if I should show you this. Let me see. Let me think about this. If I want to show you this or not. 1 second. Our website's almost done. Nah, I don't think I know, because the homepage still looks a little bit. You know what? I'll show you this. Let me. Show of hands. Who wants to see it? Okay. This is what it's looking like at the moment. It's still, this is the homepage, and it's still a work in progress. But this is good. This should be ready within the next week or so, and we can't wait to share with you. We're very excited about it. It has everything, who we are, what we offer. We're still, this is going to take another couple of weeks. We're building an online web portal for your training. That means you don't just have to stick to Telegram any longer. You can actually log in here, and everything will be laid out for you systematically. I'm just excited about that. And so, for those of you who are registered, we'd love to get your testimonials so we can put them on the site. Some of you have sent in those testimonials already, and we're grateful. But if you want to let the world know how good or bad your experience has been, please send it to us so we can put you here. But let me give you an example of what's here. Let's see. So it's our vision, who we are, our mission, and our methods. Our history, how this began for us, our story, our team, a couple of questions that people would like to know, who we are, all that stuff, what we offer, our trading courses, our VIP mentorship. This is what the VIP mentorship gives you. Our Mastermind Inner Circle. And as part of the Mastermind Inner Circle signal service, but we haven't started giving out the signals to the new guys yet because we want you to know what you're taking when you take them signals. So we're not just telling you get in, get out. We want you to understand how the market works. We offer one-on-one coaching at a discounted price if you're already a registered student. So but you also get at least 1 to 2 free sessions a month as part of your price, which is just bizarre because your monthly price is our hourly charge for people who are not registered students. So why we do that, I don't know, but we do it because we do it. And of course, we offer free webinars and tutorials online. And once the virus season is over, we will start doing that live again. So anyway, I just thought to share that with you. So also, if you remember yesterday, we gave a little bit of an analysis of what we thought was going to happen in price. I was Josh and I had a little session last night at almost midnight where I updated the analysis, but I'm not going to bother showing you that. That was for the experienced traders. But we said we'd like to see something like this happen yesterday. Well, it has already happened. So we said we wanted to see price push up into that level above here. It's done that already, as you can see. So that is satisfied. Now, it could keep just going up and up and up. We don't know that for a fact. We could see. Yep, Gerard. Yep. You're in my good books now. You're the teacher's pet for today. We do it because we are the best trading company in the world. Thank you. And so we'll be watching for this to see if that happens. And if that happens, if it takes out that level there, then we know it's bombs away. But it could just keep on going on, which is why we have biases. GU's kind of doing its own thing this week. Josh and I called this last night that there's weakness in the pound that is not being driven by the dollar. And so that's going down. That's already done its own soup, or its own, a mentor of mine calls it a turtle soup. Some manipulation there. I was hoping this would give me a retracement today to take a trade on it. It did not, so I'm not taking that. I need to see it come back into a region of premium, on Fibonacci chart. So I just let that go. The last pair on our watch list, Swissy. Again, it's doing its own, well, it's not doing its own thing. It's kind of following the dollar, but we've seen a divergence here where Josh and I were looking at this yesterday. Let's see if I can find this and show you. What chart was that on? It's fine. It's fine. It's made a lower low here and taken out that. Look at it on a daily chart. It's taken out that daily level there. But the dollar index hasn't yet. Let me just take this away. Delete. But the dollar index hasn't taken out that low there. So this is what we call intermarket analysis. Again, the beginners, don't worry about this. You will learn this. But when two things that should be correlated don't follow each other, the dollar didn't make a lower low here on a daily, but the Swissy made a lower low there. And so I expect there to be a rally at some point in the Swissy, because even though it's been brought down, the dollar hasn't been brought down. So think of it as a counterpart. It's been pulled back while the dollar is still relatively strong. When this dollar rises here, if it does rise there, then we should see a rise in the Swissy as well. But anyway, that's just following up on our analysis from yesterday, or from Sunday, sorry. So, liquidity profiles part 2. Guys, just give me a quick second here. I just need to shut this window. Something very loud is going on outside my window, and it seems to happen at the same time every day. Right? Hopefully that's a lot better. So, liquidity profiles number two, or part 2. Let's get a brand new chart going. So last week we looked at what liquidity profiles are, how they work, the fact that they are literally areas on a technical chart where you can spot liquidity resting, where you should see a liquidity pool, P-U-L-L, because there's an existing liquidity pool, P-O-O-L. And we talked about highs, lows, order blocks, gaps, things of that nature. Now today, the question is, these things are no good if you don't know what to do with them, right? So how do you use a liquidity profile? That's the question I want to answer today. How? Let's make that a color that stands out. How do you use a liquidity profile? Because like many things in trading, there's no point knowing all that beautiful information if you don't know what to do with it, if you can't apply it. The markets are full of traders who know plenty of head knowledge, but have zero ability to apply it in principle. And it's only what you can apply that makes you money. And while trading is a great hobby, don't get me wrong, I love trading for the fun of it. It's nice. But this is not worth your time if you don't have plans to eventually be profitable with it. The goal of being a trader is to make money. Simple. There's nothing deep about it. It's to make money. And you make money by analyzing the market correctly and entering trades that work or that win. So you need to know how to use liquidity profiles to spot a potential winning trade. So the first thing you want to know about liquidity profiles is transpose them from higher time frames to lower time frames. It's the first thing you want to know. You should transpose them from a higher time frame to a lower time frame. Why? As we looked at last week, lower time frames are driven by higher time frames, not the other way around. Why? Because market makers are position traders. Therefore, they are using the higher time frames as their reference time frames. They're plotting their movement on a higher time frame. What you see on a lower time frame, and I think I was explaining this with Josh last night, Think of it this way. If you know a man want a bank, a team want to rob a bank. They want to rob this bank and they want to get the money from that safe and then get away in a car. The location of the bank, where the safe is with reference to the door of the bank, and where the closest possible place to park a getaway car in front of the bank. If you're the police trying to solve that crime or trying to intercept that crime, you can work backwards and say, they're going to have to park here, get in at this door, go to that safe, come back out to this door and get in this car. You can be waiting for them at the spot where the getaway car is going to be parked because you know what the plan is. Now, the plan is the higher time frame. The location of the getaway car is the lower time frame. You got to work backwards. Let me give you an example. If you start, actually, I put that over. Okay, you know what? I'm just going to start from here because I've already written this out on an hourly chart. Or was it a forward chart I wrote it out on? Let's see. So, for the sake of argument, for the scalp, let me do this for the scalpers among us, because I'm always using the 4 hour, the daily and the weekly chart. So let's use the 1 hour chart as a higher time frame. It doesn't make sense, but it will still work. You can see this here, straight off the bat. Let's pull this down there. That there straight off the bat is a manipulation, right? It's a stop hunt market structure break. Price takes out that low there and swings here. In essence, you know, if you're using the 1 hour as your what you call it now, as your reference time frame, this is the beginning. When you see that happen there and you see that happen there, that's the beginning of a market maker move. Now, let's assume, first of all, how would you have gotten into this trade is the first question. How could you have known that this was a potential trade? Well, let's drop down 2 time frames. Remember, 1 hour, boom, boom, 15 minutes. I want you to look at this same 2 levels on the 15-minute chart. The same 2 levels we've just drawn out on a 15-minute chart. That's the first level there. What happens at this level? What are you stalking at this level? Well, the answer is, or one answer could be, a 15-minute market structure break. Where is the 15-minute market structure break? It's down there. That is the first market structure break at the 15-minute level, right? In essence, anything north of here, this trade, just strictly coming off the 1 hour, is live. You throw your Fibonacci on it, it goes from here to here. Throw your Fibonacci on it. In an area of discount, back at that same level, you get a reaction. You could trade this one of 2 ways. So you can see that's there. That's between the 50 and the 38.2. That's still a discount. It's not as close to the 30. It's not at the 38.2 like I would prefer, but that's very, very close. If you take that away, you've got 2 ways to get in this trade. Give me a quick second. Joshua, the question you asked me, right? The pair you're looking for on this server is down here. It's down in this section here. So if I throw that there, all of a sudden it will let me trade it. So if I put that in there, 1 second, insert indicator, custom, pre-order tool, and I'm gonna take 10 lines. Thank you very much. What is going on here? So that's in there. Why is it not letting me take this trade? Anyway, I'll fix that indicator later. So this is your first entry back here, and this reaction. That's a 25 pip stop loss. Your second entry is the 15-minute engulfing here. That give you a 13 pip stop loss. And then you're off to the races. Because two things. One, you frame, let's see, this is it here. You framed a liquidity profile on a higher time frame. Now, if you had waited for it to work out on that time frame, your first entry would have been all the way up here. That would have been, again, well, 25 pips ain't bad. But you can see how you got a cleaner entry by dropping down a time frame. So the first thing you want to know is you want to transpose them from a higher time frame to a lower time frame. Why? Because liquidity profiles on higher time frames mean there's likely to be far greater liquidity resting in those areas. On a shorter time frame, you will see a reaction. Now, let me give this example here. I think I'm just gonna have to use another chart. Okay, let's use this one. Let's go to a daily chart here. Now look at this particular liquidity profile. This is an order block, right? So we have an order block there on a daily chart. You could simply have waited for this reaction, put your stop loss, entered at the engulfing there, put your stop loss there. That would have been 160 pips, right? And you would have gotten 273 pips. That's not bad. But I want you to drop down again 2 time frames. Look at this. From the daily, 4 hour, 1 hour, 2 time frames. And look at what happens at that level. You see the exact same thing happens, right? The price comes in. And this is where institutional order flow happens. It comes in here. And it breaks market structure there. Can you see that? It's blue because it's an hour. It breaks market structure there. And if you notice, in the same candle, it breaks the market structure, it comes back. If you were to drop further down into a 15-minute time frame, you would see it clearly. Look at that there. It breaks market structure there and comes back there. Now, if you wanted to take your entry on, if you did the 15-minute market structure break, that would be it there. Pick your choice. If I'm coming from the daily, I'm only taking the 1 hour because there's too much of a drop. If I'm using the daily as my bias, there's too much of a drop to a 15-minute for my liking. So this is the one that I would have respected, but there you go here. You have then reduced your stop loss. So quick second, everybody. You have then reduced your stop loss to, let's see now, this is from here. That's at the most 66 pips. Here would be 62. That's about a third of the original stop loss. And the beauty of this is when you transpose your trades down to a lower time frame, even if that liquidity profile is not fully respected, this could have come here and then blown all the way down through this order block there. But it would not have mattered because you would have been able to frame a profitable trade in the short term. So that's number one, transpose them to lower time frames. Number two, I'm going to, let's see. Maybe okay, since I'm not using this anymore, I can pull this further up. Pull this up there and I'll get rid of that. Number two, refine them. Refine them on the lower time frame. Let me show you exactly what I mean by that using that same example. This is a 1 hour, a daily, order block here, right? When we drop down to 1 hour chart, that's this entire level here. Once we get here, we can refine this down to this level. We now know that this is the 1 hour order block there. We've taken the order block from 160 pips to 53. When price comes back down, and it may, we now have a more refined level to work with. If you drop down a bit further here, 1 second, you could refine it even further. And this is the beauty. If you had refined this order block down to this level here, the first time it came into the zone, look, it came into the zone here on this day on the 15-minute chart. And it actually had, I take what I said before back. I forgot, I didn't realize this. This is the 15-minute market structure break here before it even comes there on the 1 hour. Right? That's a market structure break there. It goes up above it, comes down, and you can see this here. Therefore, you could have refined this trade down to 15 pips. And in that one day, you would have gotten almost 10 to 1, about 9 to 1. Because you refined the liquidity profile. So that's the second thing you want to do. Refine them on the lower time frame. The third thing you want to do, and this is my favorite, actually, before we get to that, no, that would be number 4. Number 3 is you filter them out with a bias. You filter them out with the bias. In essence, and I was explaining this in an advanced session last night with someone in particular, you don't go about throwing every single order block that you see on your chart. Right? Let me delete this for a second. Because this is where most people have a problem. Well, there's another block here. And one, so for instance, let's look at daily chart. Right. So people will ask, why was it this particular one that it respected? Well, there's a filter for, there's a bias we have. What's the bias? Let me show you. This is what I call the story. Institutional order flow, meaning order blocks and things of that nature, market structure breaks and stop hunts, are the thief getting in the getaway car from the bank. The story is the location of the bank, where the cash register is, and where on the street a car is allowed to park or a car can physically park. If you throw this on here, right? So this is the current swing that we're in on a daily chart. This swing is still active. Why is it still active? Because price has not breached it on either side. Look here. Price hasn't crossed the high. And it also has not crossed the low. So when you see that and price is stuck in that range, this is the active swing. This is the level you're tagging your discounts or premiums from, right? Cool. Well, let's just throw away this order block for a quick second here. Let's just forget about it. We don't know it yet. We don't know about any of this yet. Where have we said we should be stocking entries? So if price is in that range, first of all, we are only buying beneath 50, right? And we're only selling above 50. So we've divided our range into buy. I'm going to put green for buy. And sell. I'm going to put red for sell. Okay. So while I'm still in this range, assuming this range will hold, I am thinking buy down here. I'm thinking sell up here. If price breaks out either direction, if it breaks out to the north, then I have a bias to buy, in which case, let's assume it breaks out to here, right? Then I would then move my Fibonacci. That will then be the new low. That will be the new high. And then I would move this up here. Or I would move the red to the top here. You know, you get the point. But while it's here, that's the story. In essence, beneath 50, and especially, I'm going to take these away now. So now that you've seen it. And especially beneath 38.2. Anything in this region here, right, is now a valid trade. We are in a deep discount to buy. Well, as at the time that formed, before that formed here, where are the liquidity profiles that line up in that level? They have to be buy or bullish profiles, and they also have to line up with that level there. So the first filter is I am not looking for a sell. So I don't care about this or even this. Secondly, it needs to line up with that level. Well, the answer to that question is there are two profiles that meet that criteria, or two order blocks in this case. This is the first one here. And this right here is the second one. So when price comes into this region, I am looking for reaction. Does that make sense? So it's the filter is it's going up. I'm looking for a bullish move. And in this area, that gives me two potential order blocks to work with. Does that make sense? Let me know in the comment section if that makes sense. Number 4, before I get to my favorite one, stalk them at historical significant levels. In essence, before price gets to that level, you should have been looking at it long ago. Let me take that away. You should have been looking at it long ago. Now, it looks like hindsight now, right? When I show you, it always looks like hindsight. But somebody say butter in the comment section. But it is not. Why? Remember we said on a daily time frame, you should be looking at historical highs and lows. Okay. Please try this on for size. Look at this low here from the end of April. Ladies and gentlemen, can I interest you in some of that? Can I interest you in some of this here? Look at this here. Look at the precision. And again, it respects it there. And again, here. If you want to go further back, there was a here and a here. So we have a bullish bias, a Fibonacci level that tells us valid trade, a historical level, and an order block just so happens to form there. What would you know? And even if you don't want to use that one, see, okay, let's ignore that one there. Let's just use this one here. Look at this one. This is an order block in its own right. Look at this here, right? That's an order block there. This from here to here. That's another block there. Can you see that? So when you see this reaction here, and you see this engulfing here, you can trust that trade. Historical level, bullish bias, Fibonacci discount, order block so happens to form there. So this is how an experienced trader would treat this. Delete this. The moment this order block forms here, look at this here. You see this here? This is going up. It comes down. So that forms as an order block that sends price up. That's the root. So even this one here is respecting this. Let me take that away so you can see it. The moment that starts going up, you are stalking it. This is where patience comes in. Look at how many days it takes. In fact, I think it's the next month. So it starts in May and it does not give you your entry till the end of June. Along the way, what is happening? This is happening. You see this here? Can you see that low there? That is a manipulation. It happens all the time. You don't trust this. You don't trust it. Why don't you trust it? One, okay, so it's at 38.2, but you don't trust it. One, it hasn't come back down to this order block yet. And secondly, you're looking for an interest swing manipulation. Now, there's this one up here, but write this down. Those interest swing manipulations, the ones that you wait for, usually tend to happen beneath the 50% or above if you're selling. So this here tells me someone is trying to engineer liquidity. I'm waiting for this particular order block because it's the one that has the historical level. And then the final one for now, for today, before we start to look at some examples of this, is look for overlays of liquidity profiles. And then in bracket, including across multiple time frames. Okay, for the sake of space, I'm just going to put that like that. In which case, we're going to line them up with that. You know how my brain works by now, guys. Just line that up there. Okay. In essence, when you see a signal converge at so for instance, this here, not only is it so that's one liquidity profile. This low here is one liquidity profile. That's a previous low. So that's one liquidity profile already. Secondly, that level is a pivot point. If you look back in time, it's an organic pivot. Every time price gets there in the past, something happens. So that's the second liquidity profile. The third liquidity profile is this order block here. This order block forms here. The fourth liquidity profile is another order block forms there. In a similar range. Right? The final liquidity profile, which I want to show you again, is this. It's the fair value gap. Look at this, right? From that point on, price just look at this. Price runs through this point in a huge move and has not come back since. Now, it came back here. That was the first time it came back. But if you see that fair value gap there lines up nicely with an order block there and one here, you want to trust the overlay. So once it closes the gap and reaches into the order block. So you have 1, 2, 3, 4, 5 liquidity profiles overlapping with institutional order flow, a discount in a bullish range. And then you get your bullish engulfing. You can trust it. Now, what do? You do what we said before. You drop down to a lower time frame. So we said you drop down to 1 second. You drop down to a lower time frame. You refine them in the lower time frame. You filter them out with the bias. We've done that already. You stock them at historical significant levels. Done that already. You look. So we've done 5, 4, and 3 already. Let's now do 1 and 2 with this same signal here. Where were we? Where were we just now? No, not that one. Not that one either. Yeah, it was this one. Cool. So let's do what we just said. Now, first things first. That's the daily engulfing here, right? That's the daily engulfing here. So it engulfed at this point here and then ran into the next day. Well, let's go to 15-minute chart. Let's see what happened the next day. So the first thing we're going to do is we are going to throw a Fibonacci on that move. Remember, this here is that historical level. That's this. This is so this is the historical level, sorry. And then 1 second, what's that line? Yep, okay, so that's the top of that other block. That's the top of that. Okay, cool. Let's come back in there. Is the 1 second? What's the day we're looking for? There. Okay, cool. One second, sorry. My eyes are deceiving me. No, it's not that. This is, yeah. So it's the first, we're looking for the 1st of July. Okay. So the 1st of July. Yep, here. Right, so let's count the swings. There's a swing from here to here, and then it goes up to here, comes down to here, and goes up to here. Comes down to here. So in the 15-minute chart, this is your Fibonacci. It's beneath the 21.4. It's at that level there. It gives you a bullish signal here. It then breaks market structure there. And then comes back down. So that's the new expansion. And gives you a perfect 21.4. Because you could trust what happened here on the daily chart over these 2 days, right? This is when the price entered the order block. This is when it engulfed out of the order block, taking out that level there. It tells you start stalking a long. And so in the same day, it goes in the direction you're looking for. And then in New York comes back and gives you a perfect retracement there. This level here is significant. It's this one here. It's this here. It's the high of this second order block. So you can trust it. And because you can trust it, you can stick your low down there and take this trade. Also, let's get rid of some of these lines. I know it's a bit confusing now. Also, I want you to look at the confluence of other liquidity profiles down here, right? There is a 15-minute market structure break there, right? In fact, it's actually here. This is the 15-minute market structure break there. So that same line there, it breaks structure there. So that's one. Secondly, there's a fair value gap here. Let me blow it up for you to see. This is also a fair value gap here. Because price runs through this level aggressively. It comes back down to it the first time, to it the second time. This time it drops way beyond the fair value gap. But it still respects that low there. It doesn't blow through it. When it comes back up again, you can take that trade. Okay, now I want to show you something similar happening today in live price right now. I am not saying for a fact that that's exactly how it's going to happen. I'm just saying this is how you could anticipate it in real time. So how would you anticipate the same thing happening in real time? Well, let's see. Today may give us that opportunity. It may. It may not, but it may. So first things first. Let's start from the beginning. We've identified an order block here. There's a daily order block there. That's number one, right? Number two, there is a confluence of order blocks. There is another daily order block just there. So you could say this is one, this is another one, but they've lined up around each other. Thirdly, look at this low from here. Can you guys hear me clearly? Because there's a racket in my back coming from my window, but I've set my microphone to filter it out. So I want to be sure it's not disturbing as much as it's disturbing me. Look at this low down there. So we have an historical level. Now you could have drawn that level coming in, or you can work backwards. If you identify a profile that you think is significant, just check. Is it at a historical price level? So this noise is just really, really irritating me. I don't know why they keep doing this at the same time we have our sessions every day. So you see that entire place here. This is a historical pivot. And there's an order block forming here. You can expect something to happen here. Now, the first question is it going to happen like this, like what it looks like right now, and come down? Or is it going to blow through it come down into it and take off? But one of these two things is going to happen. Why? Because we have an historical price level and we have now formed another block there. Also, look at this here. This here is a fair value gap. One second. This is a fair value gap here. Price ran through it one way, right? And hasn't touched it till this point here. So the argument could be made that having satisfied this here, price is now eligible to run lower. It then came out of it, and if you draw Fibonacci, that is an area of high premium. Let's get rid of this. It's an area of high premium. So there is a suggestion that we should see price move down, at least back here. And most likely to take this out into that originating order block there. In essence, the reverse of what we just analyzed could be in motion today. Again, I use the word could be. It's not set in stone. But all we need as traders is a could be to start stocking. And if our could be lines up, then we take the trade. That could be happening. So we have a lineup or an overlay of liquidity profiles. We have a bias story. Let's superimpose this to a lower time frame, shall we? So on the lower time frame, we saw price get here and then give us a daily engulfing south. And now it's taking out the lows of 2 particular days. If we throw a Fibonacci on there, that's the 61.8 level. So one second, let me get rid of this second order block here. I just wanted to show it to you to see that there was a confluence of order blocks. So let's work with the main one. Down to 1 hour. Let's get rid of that as well. This is the 61.8 level here. I'm going to put that in blue because it's coming from a 1 hour. You can see that that 61.8 level on this smaller Fibonacci lines up perfectly with the 61.8 level on the bigger one. Can you see that? So it's building a story. Let me show you that. This 61 lines up perfectly with the bigger 61. Look, that 61 lines up perfectly, almost perfectly, with the bigger 61. Right? Well, what do you know? Let's take this one away. There is also a fair value gap there. Can you see this here? There is a fair value gap there as well. Boom. Not only is there a fair value gap there, there is also a manipulation block there. Look, price goes down, right? It goes down, then violates it to the upside, then pushes back through it. So everything seems to be suggesting that if price comes back into this area here, this would be a great trade. And if it comes here, and as you can see as well, these are what we call equal lows. These are going to be, if this goes up, let's assume it goes up from here, it's going to be begging to be taken. If it goes up, it may drop down, and then that's the end of the story. And so there is a very, very good point, a good argument to be made. It may not work out. It's just a scenario. But if I see price push up back to this level at the right time of the day, today or tomorrow, and give me a 1 hour engulfing out of that region, I am going to sell. And we started the process with a D1 order block. Any questions? Any questions? Any questions? It is quite a lot to take in, Gerard. You're right. And we're going to break this down with Joshua this week with you guys in the closed beginner forums. But on the whole, let's go back to that list here. Where was the list? I think it was here. Was it? Nope. Yep. So, in fact, I am going to rearrange this into what is perhaps the linear sequence to go in. Number one, stock them at historical price levels. Number two, filter them out with a bias. Number three, we should go number three, look for overlays. Okay, I'll make this three. Number three, Transpose them from higher time frame to lower time frames. Number 4, refine them on the lower time frame. And then number 5, look for overlays. And sometimes you'll have a profile from one time frame overlaying a profile from another time frame. This is how you use a liquidity profile. Joshua, does this make sense? To answer one of your questions from yesterday in our session. Okay, so this is my assignment to you guys. This one that could be playing out today, emphasis on could be. I want you to start from a brand new GU chart, right? Open a brand new GU chart. Let me open one here. So pound dollar. Open a brand new chart. And starting from the D1 time frame, I want you to repeat the process of the analysis that I just showed. I want you to satisfy yourself how price went from here to here. Down to there. And then back to here. Can you spot it yourself using the liquidity profiles? I want you to mark it out on your charts and send it in the Telegram group, or send it to me directly in Telegram. So send it to my Sensei account in Telegram. And what I'm gonna do with every one of you, and I'm making you this promise, is now you have to do this, you have to attempt the assignment first. But I'm gonna sit down with you and correct it if you get it wrong, and show you, work with you so you can see it yourself. And then I want you to go back in price over the last few months and see if you can spot similar movements, such that when we start trying to predict them in the future, your eyes are trained to see what you're looking for. So let me go through the steps again one more time. Stock for liquidity profile at a historically significant level. Filter it out with a bias. Does it line up with the current story of what you think price is doing? Transpose that liquidity profile from a higher time frame to a lower time frame. Refine it on the lower time frame, and then look for overlaps of more than one liquidity profile in that region. Cool? Alrighty. Any questions before I close down this session? I'm going back to carry on working on the website and your next batch of Market Breaker course content. Again, for those who were in here at the beginning, make sure you are subscribed to this channel. This channel here on Telegram, make sure you're subscribed to it. And if you click on the channel at the top where it says files, it'll give you the PDFs in a list. Where it says links, it'll give you the playlist in a list. Now, these playlists are hidden on YouTube, so you only get access to them if you are in the registered session section of the program. Alrighty. We're back tonight. The teaching session. So I'm going to carry on with the Market Maker series. I think we're at number 4 now, explaining how market makers move. And then we're also going to look at what price did today so that we can map out trade opportunities for the rest of the week. Tomorrow evening, it's a closed forum beginner session. So that's going to be off YouTube. We're not on YouTube tomorrow. We're on Zoom privately tomorrow. So the questions you've had from these, we're going to work through them personally tomorrow off Zoom, off camera. And then again on Thursday. So we might take one of these live on YouTube, either the 11 a.m. or the 11 p.m. one tomorrow, 9 p.m. one tomorrow. We'll decide which one. But one of them will be on Zoom. The other will be on YouTube. And then Friday, 11 a.m., of course, is going to be on YouTube as well. So, bon voyage. Any questions about anything in particular, hit me up in the Telegram. I'm going to be available for the rest of the day in Telegram, or you can call me for those of you who have my details directly. Take care, guys. Remember, this is what you have to look forward to. And if you are watching this live or recorded and you want to get in on the action, send us an email to this email address right here. And we will be glad to get you on board. All right, guys, take care. See you later this evening. Bye-bye. Come with your notepads and your books this evening. Take care.